It's a case of new year, but same key issues as we enter 2022, and investors, economists, and central bankers get ready for the latest round of macro data and the imminent Christmas trading update season in the UK and round of fourth quarter trading figures in the US. Now, there's no bigger issue right now than inflation, and we'll get the latest updates on this topic from the world's two largest economies, America and China, in the week ahead. China will publish its data on Tuesday, the 11th of January, while America will release consumer price index figures on the 12th and producer price index data on the 13th. Now, a classic inflationary cycle tends to start with rising commodity prices, then rising factory gate or producer prices, then rising consumer prices as companies try and pass on rising costs and defend their margins, and then finally we get rising wages, or at least that's the theory. Here, we're going to get data on stages 2 and 3. In China, in November, the last set of data that we have, producer price inflation, or PPI, reached 12.9% year on year. Now, that did at least represent a slight slowdown from the 26-year high of 13.5% seen in October. Consumer price inflation, or CPI, was 2.3%. That's not actually that high by many countries' standards right now, but it was still the fastest rate of increase for China since summer 2020. Food, transport, communications, and education all showed faster rates of increase in China, and only housing was steady with a 1.7% year-on-year increase. China has targeted a 3% CPI inflation rate for 2021, as the ruling Communist Party looks to prompt growth and employment on one hand, while not letting property and stock market speculation get out of hand on the other. This could yet be a difficult balancing act, especially as the Evergrande property group continues to totter, and the producer price index figure suggests there's more price increases coming up the pipe. Now, for America's, well, its last set of data was also for November. Producer price inflation was 9.6% year on year, another multi-year high, and consumer price inflation accelerated to 6.8%, the highest mark since 1982 and the ninth straight reading ahead of the Fed's 2% target. America's Bureau for Labor Statistics also shows not just the headline producer price index data for goods and services in final demand, but also for intermediate stages of the production process. Now, rather scarily, price increases there in November were as follows: 12.9% for stage 4, which is the last one, then 20.6% for stage 3, 28% for stage 2, and nearly 21% for stage 1. And for unprocessed goods, so raw materials and commodities and the like used in the intermediate manufacturing processes, well, the price increase there in November was 52.5%. It seems logical to expect at least some of that to filter through in the coming months, but we'll see. Now, on the company front, around 10 FTSE 100 firms are scheduled to release results or trading updates, and there's a fairly lengthy list of mid and small cap firms who are due to do the same. Names which may be worthy of further study include the following, although, as usual, some of these dates could yet be subject to change. So perhaps look out for Inland Homes on Monday the 10th of January, B&M European Value Retail, Robert Walters, Shoe Zone and Games Workshop on the 11th, Sainsbury, Whitbread, JD Sports, Vistry and DFS Furniture on the 12th, Tesco, ASOS, Dunelm, Taylor Wimpey, Persimmon and Ferguson on the 13th, while Experian and Currys are due to round off the week on Friday the 14th of January. But for me, the company which could just cause the biggest fuss in the week ahead is Marks & Spencer. Now, the retailer is no longer a member of the FTSE 100, having dropped out of the index back in September 19, and it's now in the FTSE 250. But the shares are up by almost 80% over the past 12 months, and the Christmas and third quarter trading update that's due now, well, that could provide fresh insight into what Britain's shoppers are thinking of doing, how the high street more generally is faring, and how the long-planned turnaround at M&S under Chair Archie Norman and Chief Executive Steve Rowe is continuing to develop. Now, the third quarter update usually only features sales figures and sales growth comparisons on both a stated and a like-for-like basis, but it should be no less informative all the same. Analysts will first look to the overall group growth sales figure. Now, in the first half, stated sales were up 25% year on year, thanks in part to the soft base for comparison from the year before, owing to lockdowns and the pandemic. However, sales were up 5% on 2019-20, and this again may prove to be the more telling comparison. Attention will then switch to the individual operations. At the first half stage on a stated basis, food sales grew 10.7% year on year and 10.4% against 2 years ago. Clothing and home sales rose 67% year on year and fell by just 1% against 2 years ago. And international sales rose nearly 26% year on year and fell by just over 6% against 2 years ago. Shareholders and analysts will also look for comments on how online sales are faring relative to revenues from stores, and also for insight on how the M&S link up with Ocado for food delivery continues to do. M&S owns 50% of that venture, and some analysts do expect Ocado at some stage to look to sell its 50% share, presumably to M&S. Now, M&S doesn't often comment on profits at this stage of its reporting cycle. However, Mr. Rowe upgraded guidance for profits before exceptional items and tax to around £500 million for the year at the first half stage, and no doubt the third quarter statement will be scoured for any affirmation of or change to that figure. That should really be pretty much it so far as this trading update is concerned, barring any surprises or an update on the restructuring programme, which Mr. Rowe and his colleagues dubbed Never the Same Again when they launched it back in 2020. Key thrusts here were a streamlining and overhaul of the management team, largely done, the Ocado joint venture in food delivery, progressing, ongoing work on the store estate, and also the creation of MS2, an online operation within clothing and home to further develop that unit's internet-based capabilities. I hope that you and your families are all in good health and good spirits. Thank you for watching, and I look forward to seeing you next time.